Yo, yo, yo. How's it going? How's it going? Yo, what's good? What's good? How's everyone? You all excited or what?
Yes, let's do it.
Hey, let's go, let's go. Wicked, wicked, wicked. Morning, afternoon, evening, good night. Let's get breakfast for the sauce. Yeah, man. This is the chili sauce. Stoked. Let's go, let's go. Perfect, man. We'll give it give it a minute. Just see if anyone else joins. Make it fair. But gonna be good. Let's see. No ketchup, just sauce. Tabasco. Does everyone know how to like raise your hands on this? Is everyone good with that? On the chat. Raise your hand. How the fuck? Lower hand. Okay. Well, I don't know how to actually raise my hand on it either. So I'm just checking if you do. Oh shit, I found it. Sick reactions. Okay. Got it. Nice one. Cheers, man. Love heart, yeah, Alex. I see. Nice. All right. Let's begin. Two seconds. Let me share my screen. Yo, can you all see?
Yeah.
Nice. Perfect, man. So let's begin. Obviously, this Zoom call, this strategy call, all about entry models, how we get in, which should be obviously the last thing that you should ever think about in terms of trading, in terms of your analysis. If anyone has any questions, obviously raise your hand. We're going to go through them during or after the call. But basically, yeah, entry should be always the last thing that you should consider. Or after you've done your whole top-down analysis, right? That's when you get in. Like everyone wants to like just be able to catch every move up and down, like ping pong in the markets. Yeah, thinking that's profitable, but trust me, it's not. I've done that, been through that, and it doesn't work out in the long run. It's not consistent. Like you might feel good at one time, you catch it from the bottom here or the top of this wick. You might feel good 1, 2 times, but trust me, doing that every single time, getting clap city every time, it just doesn't work out in terms of consistency, in terms of long run, in terms of managing big accounts or risking big money on them. It's not the safest thing to do, right? If in terms of like, let's say prices just shoot into the sky and you're trying to short it from this top so we can keep shooting up to the sky. Like this is just pointless, yeah? Trying to predict the market too much, trying to like be on the wrong side of the market when the wave is bullish, like the train is going to the moon and you're just standing in front of a moving train towards you, just waiting to get clapped, yeah? So obviously after you've done your high time frame analysis, then we go on to lower time frames, obviously just to be involved with the high time frame intentions, yeah? And hopefully everyone has looked at the statistics from DBS. Amazing, like honestly, we're going to go through this today. As you can see, quick stats show 50% strike rate in London, 71% strike rate in London low, which is just 2 hours after London opens, like 10 a.m. UK time till 1 p.m., which is just New York open. Yeah. So it's 3 hours. Like if you only have 3 hours in a day, you can just choose between one of these sessions timings. Yeah. Like all of them are great. There's not just like, yes, it shows like London low is like the most profitable in terms of strike rate, in terms of your the winners and everything. Like a lot of them are coming in London low, just pre New York. But again, 40%, 38%, even 11%. I think someone said like if you have 11% strike rate with a 10R full volume strategy, then you're still profitable. So imagine 40%, 50%. Like it's insane. Like imagine like how crazy that is. So I love this strategy in terms of how great it is with your psychology, how good it is with your like risk parameters, like in terms of how much you can risk. You can be safe and confident to risk 1% on any account size. Like, I'll have let's say like the 300k account, right? Like risking 1% on that is 3k, right? Cool. Like, but would you be confident to do that on another account? Like even on a small account? Like people are scared to do that, right? And obviously it comes down to the strategy that you've probably learned before, or the entries, just taking too many losses. You're scared of taking, like, risking 1%. And in terms of the whole bigger thing, like 1% is actually very small. And like if an account has 100% in an account, right, 1% of 100% is not much, right? Is it? Like it's like a little drop, yeah. Obviously the funded account stuff is obviously like you got 5% drawdown, 10% and stuff. But if you treat it the same way and you have a minus 2% loss limit per day that you stick to, and if you look at any sort of profitable trader who's consistent, or any sort of stats, even the MFF stats show you that says like only the, like, where is it? So people risk, look at this, right? The best funded traders risk no more than 1% per trade. And where's the one? So look at this, right? They don't go and draw down more than 3% per day. So 2% to 3%, right? But our staff says 2%. If you can stick within these limits, then you're probably like the top 5% of traders, right? Top 5-6% of traders in the world. If you can just stick to these like simple rules and limits, yeah. As you can see, 3% of funded traders lose their money in the first month due to poor risk management. Don't be like them. Like poor risk management, like literally all you have to do is walk away after you've taken a couple losses, yeah? But it's that thing about walking away. Can you walk away? Or are you like now in a revenge state of mind, yeah? Like FOMO, and you're seeing other people catching trades, whether that be on a 0.01 lot size or something, you don't know, but you're just jealous of them or something, right? So you're just over trading and stuff. But literally, when you know that you only need like one trade, even a month on a fund account to make a lot of money, your whole mindset should shift, yeah? So in terms of this, right, like there's a couple of entry models, yeah? Either you got the inside of the 4-hour POIs or outside of 4-hour POIs. So these are, I keep things very simple and very systematic. And this is how trading should be. Like I strongly believe if you have a simple systematic plan, you can be very profitable. You just need to have good mindset as well, obviously psychology, which does make up 80% of your trading. And I strongly believe like technicals are only 20% because technicals literally like you're drawing a couple of boxes, you're drawing a couple of lines, and you click and buy and sell. It's not physically demanding or hard, yeah? In terms of what's mentally demanding or mentally hard is actually being patient to wait for that setup, to not execute sometimes when it's just like choppy or shitty price action or not in your session, keeping under your limits of your risk parameters and stuff. These sort of things, is what makes or breaks a trader. Yeah, it's what makes a successful trader, or destroys a trader, like amateurs, noobs, and you don't want to be like that. Yeah. So let me share my screen on TradingView, and we're gonna go all over these two entry models together. Okay. Okay. Sick. So I'm gonna start from a blank sheet. Basically, we're gonna go through everything, like from top to bottom. Yeah, like from scratch. I want to show you everything from like the wealth strategies. How to analyze it, how to mark it up and everything, and how it should look like. Because it should either look like one thing or another thing, and it has to look exactly like this or exactly like this, and then we execute the trade. Yeah. Like it can't just be so subjective, it has to be very clean, very nice, very easy to see for everyone's eyes. So that's what I love about it, being very objective about how trades should look. So that means, you can risk your 1% on that setup because, in terms of probabilities that like they work out a lot often. And when they do work out, it's at least 10R. When they don't work out, it's -1. And that's no problem. Yeah. Like that means you have to lose like 9 more times. Like to lose all your profit. But in terms of the statistics show, and even like trading shows, like you should not be losing like more than three times in a row to before you catch a 10R. So you need to be very robotic, very systematic, with how you actually place in trades, okay? So there's a couple of ways, that we should be trading in terms of the entry model, right? So let's talk about this. Let me draw it out for you. Right. So the first one is all about when you are outside of 4-hour POI, 15-minute order flow range. Yeah. So when you are outside of a 4-hour POI, right? Even inside, but when you are outside, especially, then you need to always only be looking at 15-minute at the 15-minute time frame in terms of your order flow range. Yeah. On the other side, we have inside of a 4-hour POI, or coming like from it to catch the first reversal entry, 5-minute order flow ranges. Yeah? Okay, so if I let's talk about this one first. Yeah? So if I was to draw this out for you, it will look like this. So let's say price is making higher highs and higher lows on the 15-minute order flow ranges, we're just making these bullish order flow ranges. Yeah. So what does price do now? It has to break this low for it to be a 50-minute chalk. Yeah. So now we have this 50-minute chalk, bearish. Okay. So now, right, for you to look for a sell, right, here, this is what we need to do. 15-minute is now bearish, right? What you got to do is make sure you have your premium discount tool from the high to the low, and only make sure you only sell, right, when price gets into the premium of the range, yeah? Just don't continue to looking for sells here with like 1-minute order flow ranges or anything, 1-minute continuations, trying to sell, no. Right? You don't know at any moment when it's going to reverse from the bottom, right? So you're in very discounted place to look for sells. Yeah, you should never be doing that, because if you know, in any sort of business, like, you always want to buy something cheap at a lower price and then sell it expensive, right, to make any sort of profit, right? It's kind of like a foundational aspect and rule of like any sort of business. So we should be doing the same thing, is like buying low and selling high, right, to make profit. So in terms of like catching the sell, yeah, how do we do this? So obviously now we have the premium area, which is all of this pricing above the 50% of the range, yeah. And what we've got to make sure is obviously having 15-minute POIs marked up in the premium only. So that means that you avoid taking any sort of crappy POIs down here, low probable POIs. We only want to catch high probable entries, meaning like we need to make sure it's in the premium of the range. We need to make sure it's a strong POI, high probable POI, which if you go over last week's video, you'll see which POIs I'm talking about. So we either have an extreme of the range, we either have like a ST flip. Let's just have them two for now, yeah. So let's say we interacted with like a demand level here, and then we flipped and broke it, yeah. Done something like this, right? This interaction with the demand, and then gives a flip, gives a reaction, and then ends up breaking the low, right? So we have a flip zone, we have an extreme, for example. So let's say these are our two POIs that we want to sell from. So what you should be doing is this: have an alert here, yeah? Literally just have an alert. Like, what else are you going to do? Are you going to buy here? No. Are you going to sell here? No, right? So you're not doing anything until this happens, right? So then why don't you just have an alert here, yeah? Have an alert and wait for price to come to you, right? Don't chase price. Don't try and be like, oh yeah, it should pull back now, let's look for buys. No, don't fucking do that. Wait for the pullback, and then wait for sells. That's it. Just have one trade idea, one direction. Yeah, you should be like, okay, if it does this, I'm only looking for this. Yeah, if it comes, and then yeah, like we'll talk about the other entries later. But in terms of your trade idea, you should have one trade idea. Either you're going to be right or you're going to be wrong. Yeah, and that's good. I like to be 100% right or wrong. I don't want to be like 50-50, meaning like, I took the trade, but I got a stop loss on the way to my actual TP. Yeah, when I'm 50% wrong, this is horrible. you don't want to do that. Yeah, I'd rather be 100% wrong, meaning like your stop loss is well protected above like highs and stuff, and you know that if it hits your stop loss, you are 100% wrong on the whole trade idea. Yeah, and that's great, right? Okay, so now we have 50-minute POIs here and here. Okay, so now we have to talk about and look at inducement, right? So a major thing, to avoid losses, avoid being like an early seller, early buyer, is to make sure that you have inducement, liquidity inducement before your POI, right, on the 15-minute time frame as well. So the liquidity inducement needs to be on the same time frame, like the 15-minute, right? For the POI, yeah, that you want to see an early seller getting swept, right, before you take in the real move, right? You want to see someone liquidated, right, to gather that fuel before the real move, right, to gather enough orders so that we can actually move to the downside to the intended direction already built by the markets. So what that looks like, right, is meaning that before the POI here, right, or here or here, right, before the POI itself, not like down here, yeah. Like it has to be close to the POI itself. It has to be someone to sweep and then move down, right? Sweep and then go down, right? It can't be a sweep if it's just making like, let's say it's inducement here, right? To get from here to here, how is that going to happen? Is it going to sweep and do this? No, not really, right? It's going to continue to make like higher highs and high lows, right? Now this is no longer a sweep, is it? This is just making bullish order flow. It's a different story altogether, yeah? This is not enticing early sellers. Why are you going to sell if price is going higher? You're not going to sell. But when it switches bearish, for example, now you're going to be interested in selling, aren't you? Right? It's the same thing. It's like, is this really enticing you to sell? Not really. But if there's something before your POI, then that might make you to sell earlier. Yeah. Let's say that there's a POI here, for example, in the discount, right? So what inducement looks like, it could look like this. Yeah. So really, it should just look like a bullish buy to sell candle, which could be a POI. But instead of using it as a POI, you want to see a sweep and then take your entry from inside of the POI, like the 1 minute chock and everything, right? And something, let me see, right here. So in terms of liquidity inducement, right, on a 15-minute time frame, as you can see, right, this was your sell to buy that takes its high. So we are bullish in terms of your order flow range, yeah? Static. I think it's just you. So yeah, we're bullish on our order flow range, yeah? So let's say we have a POI in the extreme somewhere here that's engulfed in another time frame, a high time frame at 16, 17 minutes, something. So let's say our POI is down here. So do we have inducement before the POI? Yes, we have this right here, yeah? So can you see how this is just like a sell candle and a bullish candle, which makes up like a demand zone, right? So again, you could use this demand zone as well as a POI, but can you see how there's literally no inducement before the POI, just one clean push, right? Just all imbalance. There's nothing there. There's no one to do business with, no interaction or nothing, yeah? There's no one to sweep, right? But when now you have like a sell to buy price action, this demand zone, we can now use this low, right, as liquidity for the lower POI itself, yeah? And as you see, like price literally came down, swept these lows to come into this before making higher pricing. So if there was an entry in there, we could have taken it, right? But unfortunately, there was no entry in there. But in terms of the concept, this should look like, this is what it should look like, a bearish candle and a bullish candle, yeah? It can't be looking like, you know, these sort of wicks, right? Sell to buy wicks or anything, or this long wick or something. This is not inducement, yeah? So that's what I want to see here before the POI, okay? So now let's see, when we now come in, what the fuck is this? Shit. Okay, so now when we come into the POI itself, right, this is what we need to see. Let's say we have a, let's say we have like a POI here, yeah? And we can use this as like a structural, as like liquidity right before this POI, okay? So when it comes into the POI itself now, let's say 1 minute is bullish coming into it, yeah? So now we sweep this high, yeah? So let's say we have swept liquidity. So now on the 1 minute time frame, simply, all you need to simply see is a 1 minute chop, which is this, yeah? Can you see how it's taken the high here? We were just bullish order flow, and then simply it's taken out this low, right? This low should have been protected to continue higher pricing, yeah? This low here. But obviously breaking this bullish order flow, this cutoff of this bullish flow, right, has now given us this change of character, which has given us like new information that, okay, maybe that we may see lower pricing, right? So simply now we have this 1 minute chop bearish, right? Let me just mark it out for you. So now we have 1 minute chalk bearish, yeah? So now this part is very important, right? The part about what happens after this 1 minute chalk is very, very important about how you actually get into this trade now, yeah? Because this part, this rule applies here now, okay? So if the 1 minute range, right, is the same as the 15-second range, right, then we don't need extra 15-second chalk for confirmation, right? Meaning like if this 1 minute push down here, yeah, this 1 minute break, this range, right, is exactly the same as if you go down to the 15 seconds and look at that same range. It's the same, like it's just one push, yeah? 15 seconds is just still the same push, yeah? Then what you can just simply do is simply enter on the mitigation and take the trade, yeah? Simple 1 minute chalk, right? Simple 1 minute chalk entry, take it, stop loss above the highs, you know, whatever the stop loss size is, as long as it's underneath 2 pips is good enough, yeah? Like obviously you want to make sure you get it as like high as possible. Like if you can, my average stop loss is between like 1 pip to 1.5 ish, you know, so roughly around that figure. Yeah, like especially a London session, you can get smaller stop losses. In New York session, usually it can go a bit higher to like 1.8 or something like that. Yeah, due to the volatility, due to the pips ranges, it will just increase in size naturally. But that's fine because it's all relative. So if it gives you a bigger stop loss size, maybe as well it'll give you a bigger pip range in terms of the actual TP and stuff as well. So if you can still catch your 10R, then that's good enough. Yeah. So this is the first entry model, as in if the 1 minute range is the same as the 15-second range, then you don't need extra 15-second chalk for confirmation, right? However, right, if the 1 minute range is pretty large, and let's say the 15-second has to chop back to bullish in this scenario, right, to get back into this 1 minute POI, right, then 100% use another 15-second chalk right here, right, to actually get into the trade, right? So having basically, right, having 15-second chalks in both scenarios, having 15-second order flow ranges in every scenario is just so high probable, like so high probable, very, very much so. Yeah, like literally the statistics I've shown you earlier, how it increases so much in terms of the strike rate, is when you have 1 minute chalk and you have 15 seconds in your favor, right? It's crazy. It's amazing. So what that means now, let's say for example, the 15 seconds, you know, has to, let's say the 1 minute looks like this, but then the 15-second, you know, is doing this inside of it, right? And it has to chop bullish to get back into this 1 minute POI, 1 minute here. So then we have to now wait for another 15-second chop to actually take this trade, yeah, which is like this. Okay. So simply, right, you take this entry model, right, either in this POI here or this POI here, right? And this is with the 1 minute, this is with the 15-minute inducement already swept already, yeah? So if the 15-minute inducement has already swept, we can look for this entry model here, right? So let's talk about if the 15-minute inducement, there wasn't any, yeah? It's just clean push down, just all imbalanced. There's nothing there, right? It's just imbalanced. So let's say there's no liquidity to be swept, right? So now you can't take this entry just like this, right? So now this is important. Right here. So now there's no inducement here, yeah? So now if there's no inducement on the 15-minute, okay, that 1 minute needs to now create liquidity inducement before the POI or even in the POI if it's big enough, right? So what you could do is a couple of things. Let's say it comes up on the 1 minute time frame, right? And it gives you a series of like double tops here, yeah, like equal highs, generating liquidity above here, right? So now simply this is happening before the POI here, or even inside it could happen, right? And all you're waiting for now is simply for this liquidity inducement to be swept first, right, on the 1 minute time frame, right? So now that's enough. Sweep it, give you the chalk, which is right here. Takes the high here, takes the low here, yeah. So there's bullish order flow. Then you have a cut off of this bullish order flow because this low should have been protected to continue higher pricing, right? But cutting off this bullish order flow, meaning now we have this bearish order flow coming to the market, and then now we can look for the entry, yeah. So this is one way, right? And then the way that I showed you earlier about this, right, applies to every single entry. Yeah. So after that 1 minute check happens, right, this applies to every single entry. Yeah? Literally this. So make sure you have a pen and paper right now and you're writing down everything. Like literally, you should be writing down everything. That's the best way to learn. Okay. So let's say we don't have equal highs. Yeah. The second thing it could do is this. 1 minute coming up bullish, right? But then we get this 1 minute chalk here, right? And this is simply what I just call the fake chalk, right? Fake chalk meaning because this first chalk here could just be, right, generating liquidity inducement above this high, right, to be used as fuel to sweep, right, before the real move to the downside, okay? So all we're waiting for is not to take an entry from here to here, right, on that 1 minute chalk, right, is to wait for the sweep of this 1 minute high, 1 minute chalk, right, this fake chalk, and then simply take a second chalk after that, okay? So use this high as now inducement because remember, the 15 minute has nothing. Yeah, there's literally no inducement right here. So on the 1 minute, it has to create something. Yeah, on the 1 minute, not 15 seconds, not 5 seconds, not nothing. Yeah, literally the 1 minute now it has to create this inducement, meaning give you the fake chalk, give you equal highs, right? Sweep them, right, and then give you another 1 minute chalk. Yeah, another one. Again, not a 15 seconds, it's another 1 minute chalk. Yeah. So now we look for the same entry model I just showed you here. If the 1 minute here is the same range, we can just simply, execute right here. But if the 1 minute and 15 second is different, let's say in this 1 minute leg, the 15 second is bearish, then it goes bullish, chucks on the 15 seconds, it chucks on the 15 seconds to go bullish inside of this range. Then, like I said, you need to wait for 15-second realignment. Yeah, just like that. Okay. So literally, this is it. Like on the first, this is outside of a 4-hour POI. So if it's just in a simple, like nowhere, let's say there's no 4-hour POI and you're waiting for the entry model to present itself, then, this is what it should look like in terms of there's no 4-hour supply zone or anything, right? But what you can do instead is use a 15-minute chalk now to look for sell, right? So in terms of what a 15-minute chalk can look like, it can look like this. So here, as you can see, we have a bearish candle, right, which is necessary. You need to have at least one bearish candle, in the range, and we need to have one candle basically inside of the range as well, right, before we break the high. And there has to be a gap, right, between the high and the break. Yeah. So in the pullback itself, like just in here in the pullback, there's a gap right there, that separation. Yeah. So I want to see that separation. I want to see that clear interaction that we have supply trying to push price down. However, demand steps into the market right here to then push price higher. Yeah. I want to see that clean, nice order flow, right? So obviously we take the high and then we take the low right here, right? And this is just all bearish, bearish, bearish. So there's no clean pullback or anything, meaning that this is all the same leg. Yeah. So when it's all the same leg, what you can do now is simply have your range marked up from the high to the low. Yeah. So let me go over this entry and then I'll answer your questions so far. So can you see how, okay, we have this whole bearish order flow leg, yeah? 50-minute is bearish from here to here, breaks here. So whereas the premium is up here, yeah? So we only want to sell from premium, that's it, yeah? There's no sells down here, nothing, right? So let's say, okay, we want to sell from premium, for example. We have a POI, for example, on another time frame, can't remember which one. It comes into something, these wicks here, yeah. These buy to sell wicks, buy to sell, yeah. This is the buy to sell, this is the ST flip that broke the range, right? This buy to sell. So if it comes back into here, comes into the extreme, right, we can look for an entry, right? So go back on 15. So the question is now, do we have 15-minute inducement before the range? Not really, right? We see all these wicks and stuff, right? There's no bullish candle in the range. There's nothing as a POI to use, right, as like inducement. So that means a 1 minute needs to create inducement, okay? And the thing is as well, The other option is if the 1 minute doesn't create inducement before, right, the POI, right, it can also create inducement afterwards as well, right? So let's say this doesn't happen, yeah? Let's say this doesn't happen, okay? And let's say now the 1 minute does this. 1 minute chucks here, yeah? But let's say, for example, it does flip and chuck, right? So now the 1 minute has enough flip and a chuck right here. And now can you see how we have like a flip, ST flip POI, we have an extreme POI, yeah? But can you see how there was no 15-minute inducement in this leg, right, before the POI? And then there's no 1 minute inducement that was generated and swept before as well, the 15-minute POI. So now what you got to make sure is that the 1 minute now actually sweeps liquidity afterwards, meaning that, you know, how this high is what flipped and broke the range. So if we break this high, then we have a 1 minute chock, right? Right. If it breaks this high here, we have a 1 minute chock bullish, right, back into this POI. So what we can say is that we can use this high here, right, as a liquidity point, right, before this extreme, right? Meaning that I'm not going to sell from here, right? The only way I'm ever going to sell is making sure that we have inducement before a POI on the 1 minute time frame. So the 1 minute has inducement before a 1 minute POI, right? So I'll only wait for this one POI here for a 15-second chop entry to take a sell, okay? This is very, very important. Make sure you write this down. So 15-second comes back into here, sweeping this 1 minute high here as inducement for this POI, and then a 15-second chop for your entry. Okay, so in terms of a example, this is literally the perfect example where there was no inducement on the 15-minute, on the 1 minute though. On the 1 minute though, can you see how the 1 minute does this, right? It's like bullish, it then chucks bearish, which is here, right? So the 1 minute chucks bearish, right? But coming into this, we did have inducement, but let's say we didn't have any inducement before it, and let's say it was just like this, right? Let's say it's just 1 minute it goes bearish, right? And here, right, let's say because there was no liquidity on the left, there was no on the 1 minute, there wasn't on the 15-minute. So now you see how we push up and then we push back down, breaking this low, right? So you see how this high now becomes a liquidity point to get swept, right? So as you can see how perfectly price swept this high, still is maintained, is still underneath the actual high of this wick, right? Meaning, like, you know, this high, this range, this 1 minute range is still valid, right, to look for an entry if we get a 15-second shock, yeah? So perfectly swept that 1 minute inducement, gives you that 15-second shock, which is just a simple sell to buy, takes the high, gap in the middle, bearish candle, then it breaks the low, gap here as well at the bottom, right? Perfect, right? So this is a perfect entry where you can simply enter on the chalk itself, stop loss above the high, because the stop loss is only 1.1 pip, so it's tiny, yeah? Like, it's so small that you can simply enter on the chalk itself, right? What's the point of waiting for mitigation when, like, your stop loss is so small enough, right? There's no point, there's no purpose of a mitigation. There's literally no purpose. And if you're waiting for mitigation because you want to have a 0.5 pip stop loss or something, which, you know, you can't even get filled on in terms of prop firms or anything, due to the risks and stuff. So there's no point. And then you miss the whole trade, right? So hopefully everyone understands this first entry model. Okay. Let me just see. Oh, you wrote down loads of questions. Put your hands up, bro. Put your hands up. Let me just go through. Wait. Let me go through. So basically, we should always look for liquidity on the 15-minute before jumping down to the 1 minute. I think people get impatient and count every little thing on the 1 minute as inducement. Exactly, yeah. So always waiting, like I said. Yeah, always waiting for the 15-minute inducement before the 15-minute POI. If not, wait for 1 minute to either create inducement before it or sweep inducement after the chalk on the 1 minute. Yeah. High cash I have a question. When it's a LOFR not valid anymore, but if a new chuck happens inside the current LOFR, which chuck is valid? Okay, so in terms of order flow ranges, simply you see how like this high to this low is your order flow range. The only way this is gonna get invalidated is if it goes and breaks this high, or if it creates a new range, right? Then I don't care about this high as in like an order flow range, like it becomes this high now, yeah? So you just keep following it. You keep following it, be like, okay, this to this, then it breaks. Okay, so now it's here to here, but then it goes from here to here. This is your high and low, yeah? So you keep following this. Now we chop bullish, right? The pullback, continue bullish, right? Like this, yeah? So don't confuse yourself with like Booth and Chalk, Nezha, because like, yeah, you're just gonna confuse your brain. But simply just follow your ranges. Just say one thing, like, you know, we have a Chalk. If we have a Chalk bullish, right? Let's say there was a new range here. Let's say there was a bullish buy to sell like this new 15-minute order flow range, and then we go bullish here. Yeah. Then okay, then you can say, okay, here to here, this could happen as in your bullish order flow, right? You see, this is your chalk and that's it, right? Or we just continue in the flow, bearish, right? That's it. Don't confuse yourself. Yeah, like I'll show you more examples later if you need. So for double confirmation entry, you mean both the 1 minute chalk and the 15-second chalk? Yeah, exactly. That's what I mean. Yeah, 1 minute chalk and the 15-second chalk is a double confirmation entry. Sweet. So this extra 15-second double confirmation gives me so much more confidence. Yeah, I know it does. Literally, it's amazing. Quadruple double top. What happens if the 1 minute inducement sweeps the low first and then the high on the range? It sweeps the low first and then the high, yeah? Like this, then this, yeah? This is inducement for that 15-minute POI, okay? So then, yes, as you can see, we sweep it and we get a 1 minute chalk entry, yeah? Like, let's say there was nothing here, there was no 1 minute chalk here, and let's say it was just like this right here, yeah? Then we want to see 1 minute chalk happens, right? Either it sweeps this high as a fake chalk, or it gives you more price action, right? It develops more price action like this, yeah? Then you can sweep this high to come into a higher POI, and then use a 15 seconds inside of here. Does that make sense? Yeah? What if proper chalk will happen just above a 15-minute POI, let's say in an area between the two? Yeah, if it happens in between two 15-minute POIs and it's just imbalance, like you see how here, for example, let's say all of this is imbalance and then we have this POI and this one, and you get a 1 minute chalk here, then I'm not taking it. Like, that's simple. I'm not taking an entry there. I'm only taking it if it comes into mitigation of this POI or this POI, that's it. It can't, if it breaks this one, now it's invalidated. It's invalidated, so I'll wait for this, right? Just wait for like entries to come into your POI, and every single trade that you see on my markups and stuff, and every trade that I take, and all the textbook entries are all these same ones. And as you can see with the strike rate and with the RR and everything, like just stick to what works, and that's it. In the example you showed now, it's starting from a 15-minute shot, but can we play the exact same thing also in a continuation? Yeah, everything's same. It doesn't matter if it's a chalk or continuation, right? You're still gonna use the same rules to apply, right? Just because like this is your well, this is a continuation, right? This was your 15-minute chalk bearish from bullish to bearish, but this one is already going like bullish, and then you see the sweep, and then you take an entry to continue bullish. So it doesn't matter if it's a chalk or if it's continuing bullish. You still look for the exact same scenario, same model, yeah? Same entry model. If you're unsure about a 15-minute inducement, can you just wait for 1 minute inducement? Yeah, you can. Bro, I just understood the shady entry from this week when I was lost. The 1 minute small liquidity after a 1 minute shock. Yeah. Oh, nice. So if price on the 1 minute has to sweep some liquidity coming back into a 1 minute POR, we can just enter on 50-second shock. Makes sense. Yeah. In the example you now showed, it's starting from a 50-minute shock, is shifting from bullish to bearish. Can we play the exact same thing in a continuation of 50-minute order flow range? So if we are bullish and keep going bullish after a pullback into discount, and I mean, if we're not in a 4-hour POI, yeah, that's exactly what I said. So if continuing bullish, right, and we're not in a 4-hour POI, yeah, we continue to use the same rules, either inducement here or the 1 minute creates inducement, sweeps it, and then takes the entry. Yeah. Do you understand the trade? So when the 15-second does a chock to come back to a 1 minute POI, but it doesn't come back to the POI, instead it just comes back, but not far enough. Do you go back to the 1 minute, wait for a chock? Yeah. So if it doesn't come into a 1 minute POI, I'll just stay on the 1 minute. Yeah, stay on the 1 minute to see a 1 minute chock again, and then take an entry that way. Take an entry that way, yeah, same. So 1 minute chock can happen. 1 minute chock can happen, but it doesn't come into the POI for a 15-second chock. It just happens like this 1 minute chock here, right? Then I'll look here for the same thing, like either 15-second realignment. But yeah, pretty much at that point, like you can just enter this trade because you've already got all the confirmations from before. You only need at least 5 confirmations to take the entry. At this point, you've already got the 1 minute chock, and you got another 1 minute chock. Like, yeah, you can just simply enter this trade, and that's fine. That is your double confirmation because it's high time frame, so it's just better. 1 minute inducement only on the right. Yeah, only on the right. Don't look to the left. Yeah, so it has to happen, right, when it's mitigating. Your 50-minute POI is like here. Don't look here on the 1 minute time frame. No, look here on the 1 minute time frame when it's coming down, when it's mitigating your entry. Yeah, makes sense. So when 1 minute chocks back bearish to a 1 minute POI, can we enter after a 15-second chock, or do we need a new chock? No, you can just simply enter on the 15-second chock, right, after it sweeps. You don't need another 1 minute chock, because as soon as you get the 1 minute chock already the first time you get it, now even if the 1 minute now comes back bearish back into that 1 minute POI, you can still take a 15-second chock. That's fine. You don't need, again, 1 minute back to bullish. Yeah, you don't need that. All right. So Chad, you got a question?
No, sorry, mate. That was just me testing it earlier, putting hands
up. See, no worries. Data boy, how you doing, bro?
Good. How you doing, man?
Yeah, good, man. So
good. So, quick question. Yeah. I'm assuming it's kind of like the same idea as like, so let's say we're coming back into a POI, right?
Mm-hmm.
And we get this flip, and within here we can play like a 15x confirmation because 15x is coming back bearish.
Yeah.
But obviously the extreme is still valid, right?
Yeah.
So it's kind of the same idea as like the 15M, where the first one that causes like the 4 hour.
Yeah. I'm gonna talk about that after.
Lower high, lower. Okay, cool.
Yeah. It happens.
Perfect. That's all.
I'll talk about that later. But do you understand everything so far?
Yeah, for sure.
Yeah, amazing. Sick, bro, sick.
Thanks, man.
Okay, no problem. Okay, let's talk about the second one now. Perfect. So hopefully everyone has understood this one, and let's talk about this now. So let's say now, right, we are inside of a 4-hour POI. So let's just draw that out. So this is your 4-hour POI demand zone, right? So 4-hour POI, what we can do now is because we already have this one confirmation now that it's a high time frame POI. High time frame POI supply and demand zones obviously have more weight to that area, that point of interest, because we have a lot more stacked orders, right, resting on a high time frame level, right, rather than a little like 1 minute chock and stuff, 5-second chocks. Like there's not a lot of orders like building up and over time inside of these little chocks. That's why you see them like chock up and down like every time. Whereas the high time frame, they don't do that stuff, right? Because there's a lot more time and a lot more volume of orders being stacked in the sell to buy, right? They stack all the sell orders before they buy up. So when they come back down to mitigate, usually you see a bullish reaction. And like I said the other day, the bullish reaction can do two things. It could either be used as a little pullback before lower pricing, or it could use this demand zone as a cause for a full reversal, right, to continue higher pricing. Okay, so because of that being like already a higher time frame confirmation, right, for our demand or supply zone, instead of waiting for this big 15-minute chop to happen, right? We can wait for just a 5-minute chop to happen. Yeah, not 1 minute, not 15 seconds, but a 5-minute, right? So it's not too small and it's not too big that you miss the whole move waiting for this, right? And honestly, this entry model is the one as well that presents the highest strike rate out of these two models, which is, amazing. Like, and it's more simple too, which is mad. You just have to be more patient to wait for this because obviously it's not always going to come into a 4-hour POI. But when you do get these entries, like they do bank, like, really good. So it's amazing. So 4-hour demand zone, let's say now price comes into it. And now, because we tapped in, what you can do straight away now is jump onto the 5-minute time frame now, yeah? So we come in, right? And now in the 5-minute, we're monitoring where the 5-minute clock will be. Let's say it's this high, yeah? So the 5-minute clock happens first, right? And this is what we need to see. And simply, the 5-minute always needs to be in your favor, right? So let's say we are looking for longs. This 5-minute range always needs to be bullish, right? It can't continue bullish and go back bearish here, yeah? You can't be doing stuff like that. Just always make sure it's always bullish, right? If you're looking for longs, and if you're looking for shorts, obviously make sure it's always bearish to look for sells, this range, right? So now 5-minute is bullish, right? So now this entry is so simple, right? You don't have to wait for like all this stuff in terms of the inducement and everything, right? In terms of inducement, you don't have to even wait for that. You can just simply put your fib tool from the low to the high, right? And wait for price to come into, the discount of the range, right? So you can have your POIs, marked up in the discount. You can have your like ST flip zone and extreme, for example, yeah? And this is so simple. Like all you have to simply do on this one is the 15 seconds coming down bearish and we tap in, yeah, into a discount, right? And now simply wait for the 15-second shock and take the entry. Yeah. Like I can't make it more simple than that. Like it's literally so simple but so effective. Like it's mad how systematic and effective this could be. And it's mad. And you simply just take your trade like this. Under mitigation, take it, right? 10R, take that sell, right? Let's just mark it up. Yeah. So I'm gonna show you some example of this and answer your question. So let's see where it was. I think it was right here. Yeah. You should all remember this day. It was insane. Okay, so 4-hour, right? Can you see on the left, right? We have this 4-hour demand zone, this sell to buy on a high time frame. Can't remember what time frame it was, 6 or 7. Yeah, 7-hour time frame. We have this. I think it was 8-hour as well. This sell to buy engulfing candle here. So you use this as an extreme of that 4-hour bullish range, right? Which is from here to here. Okay, this extreme, right? Very discounted pricing as well. So, amazing POI, like with pro trend 4-hour, great. Okay. So now we can simply jump onto the 5-minute time frame as soon as price comes into it. Yeah. So now, as you can see, price taps into it here, and now we can look for the 5-minute time frame, right? So 5-minute, right? It gives you first a chop, which happens from here. We are bearish, and then we go bullish, right? So because we go bullish, you map up your premium discount from the low to the high. You wait like for the 1-minute POIs to get tapped in, and you take the 15-second entry, right? But this one loses. I'm gonna show you this entry, and I'll show you the one that wins. It's exactly the same setup. Like it's exactly textbook, like literally picture perfect. They all look the same. Whether it loses or wins, doesn't matter. They all look the same. So it's crazy how like probabilities work out. Like if you just avoided all of them, or you you only took the first trade and you didn't take the second one, then yeah, you would have missed out on like 3 winners in this scenario, like 10-hour trades in this one price action. I think it's just like 1 hour. Yeah, like 1.5 hours of like just trading in the morning. you could have like passed any sort of challenge or anything. So made you 10% profit on this one trade. So as you can see, right, what happens though? It actually takes out the low, right? So the 5 minute goes from here to here because we take out the low. But remember the same thing about what I said about the 4 hour and 15 minute order flow ranges is about what flipped and broke the range becomes your new order flow range, right? What flipped and broke the range, right? It didn't just do a one clean push down to break this low, right? Then it would be this to this. What it did instead was it comes in to the demand, right, or to the low, right? It then gives a reaction, pushes up. We see that bullish candle, and you see a gap in the middle between this wick and the break. It's hard to see right now. Let me zoom in. As you can see, from this low to the break, we have that gap in the middle there, yeah? And this is one bullish candle pushes up before the push down, yeah? And I'll talk about shit wicks after this as well. But this is a clean 5 minute push up, push down, takes the low of that 5 minute. So in terms of like order flow, what should happen was if it wants to continue bearish, it should continue from this high, yeah? The fact that it's gone and broken what was responsible for breaking this low, the supply here, right, was responsible for breaking that demand. Now it's gone and broken it. So basically what happened is that demand has overcome the supply. Then that shows us that bullish intentions, right, coming from that 4 hour POIs or that we may want to see higher pricing, yeah? So because we have that 5 minute chart now, what do you do? Same procedure, yeah, same process was we go into the 1 minute time frame and we look for 15-second chocks, yeah? So let's talk about this loss first, yeah? Same entry model. We have 5 minute bullish range. We have the discount, which is obviously anything below 50%. We have this POI in the extreme, which I think it was a 2 minute time frame, yeah. So we have a 2 minute bearish sell to buy engulfing candle, right? Price comes into it, and do we get a 15-second chock in here? Where's it going? There you go. As you can see, right, clean, very clean. Here, push, pull back, break the low, and then it even flips and breaks the high. So you can just simply enter as it mitigates stop loss below the low, and it's a valid loss, yeah? Very, very clean loss, very simple textbook entry. You have to take it. There's no problems taking it. Of course, you have to take this trade. You don't know because this one and this one and this one, they all look exactly the same. So you don't know if this one was going to win. Yeah, you don't know what's going to happen. So you have to take them. Like I'm 100% going to risk my money on this trade because I'm going to take this one as well. Like because they all look the same. So if I was going to take this one, why would I not take this one? Why would I not take this loss or this one? Because they're all the same, right? So this entry right here is exactly the same setup, right? Because we have now 5 minute bullish order flow range from here to here, breaks this 5 minute here. We have the 1 minute POI in the extreme, which is on another time frame, I think 2, 3 minute. Yeah, 3 minute candle here. This one, this sell to buy engulfing candle, right? Price comes into it. Perfectly gives you a 15-second chock, which is this one lower is a valid chock, but it's the one I would take is the higher one just because it's more concrete, like it's just more of a proper range, right? More of like a proper high to get broken. This one is very tiny, very small, like it is valid, you know, you can take it off of this. It's a little bit riskier, I think a little bit more aggressive, but it's valid. But personally, in terms of like a proper chock, like proper high and low, this just looks more reliable, right? So then as it chocks, right, it then comes back into the POI, right? Either you took it off this first one here or you took it off this mitigation, yeah? And as you can see, the 15-second, right, it's aligned, yeah? Do you see how it's aligned? Like if it wants to chock bearish, it have to chock here, right, to come back bearish, right? But it was aligned. So when it mitigates, you just enter. Its stop loss is below this low, and that's fine. You're chilling, right? And then that was a clean 10-hour trade. You know, it went even more, but you know, you just need to be capitalizing on your 10-hour trade, and that's it. Like 1% risk, 10-hour, you pass anything, right? Luckily, it didn't hit break even on this trade after it went to like what 6-hour. And then again, let's say you missed this trade and you want to catch the re-entry, then it comes back into the 1 minute POI, it gives another 15-second shock right here, clean. That's a loss, valid loss, clean, yeah? And then after that, it gives you another 15-second shock, which is from this low to this high. As you can see, bullish candle, gap in the middle, breaks the low, breaks the high, yeah? mitigates, 1 pip stop loss, you can just simply enter this on the chart itself. That's what I would do. And then that's it, take it. Again, this one, the 10-hour trade win. Perfect, right? I seriously tried to pause to take notes. You need a time sheet. Yeah. But you all understand like how it's all the same. Like as you can see, every single one of these trades, 5-minute bullish, 1-minute POY, which is the ST flip. It's in the discount. It comes in. You get a 15-second chop again. Again, enter on the break of the 15-second, which is there. Right? It pushes up, pushes down, gap in the middle, bullish candle breaks the high. Enter right here. Right? Again, 1 pip stop loss as well. So small, so you don't need to wait for like a mitigation here. Yeah. And if you did wait for mitigation, you probably miss it, or you could get in on this wick, right? But again, another 10-hour trade, right? So any one of them, like, yeah, there's 2 losses, valid too, but all of them, like, hit 10-hour. So I know a question is gonna say, wait, I know there's a question that says, how far coming out of a 4-hour area of interest do you still use a 5-minute model? So this is what I answered on the chat in the group earlier, was that, you know, this is your 4-hour zone, yeah? When it comes in to mitigate, I will continue to look like for these 5-minute ranges in this area until we come into like the opposing 15-minute like supply zone. Like for example, like as you can see here, the 15-minute is bearish, yeah? So what price could do is this, yeah? So price could do that. So why would I look to continue using 5-minute here? I'm not going to do that, right? But anything that's inside here or just coming out of it, right, very close to it, it's never going to be up here. Right? You're never going to see me or anything like taking 5-minute entries up here. No, it has to be very close to the 4-hour POI, which is right here, yeah, coming out of it. Right? As soon as now we come into that 15-minute supply zone, 15-minute bearish, right? I'm not going to look for any more buys, right? Because essentially, if it could do this, then I'm going to look for sell using this model there, that 15-minute model, right? Because now we're outside of a 4-hour zone, right? Now we need to see the 15-minute range, right? 15-minute bearish comes in, we need to see inducement on the 15-minute time frame or the 1-minute time frame inducement, then the 15-second alignment, and then take 1-minute chop, 15-second chop, yeah? So does anyone have any more questions? Let's see. When entering 15-second chop, we should cover the 1-minute low. If you can cover the 1-minute low and your stop loss is small enough, then yeah, you should do. If you know you can't do that because stop loss would be too big, then just you can cover the 15-second low. Yeah. Is it going to be deleted today? No, this one stays on till next Sunday, so don't worry. It's like Sunday to Sunday, so whatever happens today goes on to next Sunday. Realistically, we would have taken only one of these trades live since we didn't get a TP before the next one. Yeah, exactly. That's why I said, like, if you take this one, then I'm not taking any more. But if you miss this one, then you cash this one. You cash the loss, then you have to cash this one. Yeah. Unless if I'm on like a personal account. If I'm on a personal account, I'll take this. I'll be at break even. I'll take this and take the loss. Take this one. Go break even, and then take this one because you have like 500 leverage. So like you can take, you know, all 3 of these on your personal account. But unfunded, I just take the one because I want to just lose one time or win one time. I want to know if I'm right or wrong, like that one time. Well, I'm gonna like open my capital and the account, like expose it to so many more trades and stuff. Plus, you literally can't take that many trades unfunded when you're risking 1%. Sometimes you can only do like 1. So it is what it is. Can you also go over the third entry? I just did that, yeah. When we have, oh, wait. I think when we have a first 15-minute chop that causes for a pullback, yeah, I'm gonna do that. Does it have to be a 1-minute POI and a 5-minute premium discount? Can we use 5-minute POI? Yeah, it needs to be like 1 minute up to like 4 minute. Well, usually 3. I like to do like 1 to 3, but I don't want to use a 5-minute because then what happens is like 5-minute starts becoming like a huge POI, for example. You don't want to be taking like so many hits and stuff coming into it like this, like 15-second here. You want to limit down the amount of trades that you can possibly take. You know, don't try and take 5 entries coming into like a POI. No, just a 1 or 2 max. Yeah, like that's it. if B, you can take another. No inducement for this approach. Yeah, no inducement needed because we already have 5 confluences in this favor. Yeah, 5 confluences. We have the 4-hour POI. Yeah, we have then 5-minute order flow range in your favor. We have the premium and discount of the range. We have the 1-minute POI. Right, we have 15-second chuck in your favor. Right, so we have 1, 2, 3, 4, 5 already. Yeah. Same with the other one. This one as well. So we have at least 5 because we don't have the 4-hour zone to say that's one confluence, right? What we do have instead is a 15-minute POI as a confluence, right? Then we have 15-minute or 1-minute liquidity inducement, right? We have the 15-minute POI. We have the 50-minute order flow range in our favor, pro trend, right? Then we have as well the premium and discount of the range, and then we get the 1-minute shock, and then we also get a 15-second now, right, in our favor. So we actually have 6 confluences for this one, right? But it's very important to have these for this entry model because it's not coming out of a high time from POI on the left, so it's kind of like in no man's land. So when it's like in no man's land, it's just in middle of nowhere, it's just in imbalance or whatever, then you need to wait for proper development of price. You see what I'm saying? Like a proper base. Like it needs to give you something that you can work with. Yeah, you can't just work with thin air, right? On average, your 10-hour target range, how large should it usually be pip-wise? Yeah, obviously around 15 pips, yeah. Like my usually, like in London, usually like stop loss are like 1 pip, 1.5 pips max. New York, 1.8 pips or something, 1.9 max around that, like below 2. So obviously, yeah, 10 hours, what I'll go for. And obviously, if you look at the statistics and so as well, like don't try and cut your trades short, like 5, 4R and stuff, 6R. Like if you look at the stats, yeah, you can't mess about with the stats because if you start cutting your trades short, you start taking random trades, you start doing random stuff, then of course your trading and your results is not going to match the stats. Yeah, it's not going to match the actual strategy results, is it? Like you're not fully, like I say here, executing flawlessly. You're not fully capitalizing on the strategy if you're just not following the rules and following like what you should be doing, right? You're messing up with the sequence and the probabilities at that point, right? So you need to make sure they all look the same. They all like valid, like completely high probable trades, either this or this, for example. And that's it. Like I take the same setups all the time. So we should all agree on keeping stop loss from 1 to 2 pips max. Yeah, we should wait for another 15-second chop if it's bigger than that. Yeah, you should. Can be also another extra strategy for data. It doesn't normally happen, so it's nothing really extra to add. Like once you get the 1-minute chuck in 15 seconds, like that's it. Like there's not really another chance after that really to get in again on the 15 seconds. It's very rare, very rare. It could happen. Trade management is very simple. Yeah, trade management is very, very simple. Like, for example, I keep things so simplistic and easy, like, so it's so easy to follow. And all it is simply is, let's say, if I was to draw it out, right, 1-minute chuck, 15-second chuck, right, 1-minute boss, yeah, and you entered on the 15-second chuck like this, right. As soon as it 1-minute boss here, then yeah, like move stop loss to break even, yeah. It's that simple. Like if this 1-minute boss, right, is like it's too close to your entry, right? For example, let's say it's like here. So not here. The 1-minute boss is like down here, right? Let's say it's too close to your entry and you know that price could easily tap back into your entry like here, for example, right? It's too close, right? So when the 1-minute is too close and then you could simply mitigate again, right? Then just wait for another 1-minute boss, right? The second one. So wait for 2, right? Then after this one, then yeah, 100%, let's go break even. Like That's it. Because now, in theory, price should now not break that 1 minute low if it wants to continue high pricing. Yeah. If it goes and breaks that, most likely it might just go and hit stop loss anyways. Yeah. And in terms of the statistics, in terms of like real life trading and experience and everything, I've seen a lot of times that after this, the 1 minute boss happens, like it doesn't normally come back to your entry. Yeah. After 1 minute boss happens, it doesn't come back. After a 1 minute boss or 1 minute chalk happens, it just doesn't come back. Right. So I will take that risk and go break even and risk hitting break even rather than taking so many more losses, if you get what I'm saying. Yeah. The other thing is this scenario where you have 1 minute boss would be here, right? But let's say, you entered under 15 seconds in that 1 minute POI, 5 minutes bullish, right? 1 minute POI, you entered under 15 seconds here, yeah? So the 1 minute is too far, like this could be about 10 pips, 6 pips away, yeah? I'm not gonna wait for this to go break even, right? I'm not gonna wait for price to go to like 6R, 7R before I go break even. So what am I doing instead? Now I'm entering under 15 seconds. What I'll do is wait for 2 15 seconds boss to go break even. Okay. And now price in theory should continue to respect this bullish 15-second order flow high, like high lows to continue and breaking that 1 minute, right? And then by then that's like 10 hour to here. But yeah, and then yeah, 10 hours, that's it. In terms of like management, 10 hour full TP, close it. Usually that's what I do on a funded account and stuff and challenges. 1% risk. But if you want to like swing it a bit, if you're pro trend, pro 4 hour order flow, then just take off 80% at 10 hour if you want to do that and swing the rest 20% only if it has potential to run to the weak 4 hour order flow highs or lows, and only when the risk to reward is above 25 or plus on your final TP. Because if you're closing at 80 here at 10 and you close 20% at like 15 or something, then there's absolute no point. There's no purpose. It's actually stupid, like, to wait longer just to cash the same amount of money, to make the same amount of money or percentage as me closing fully at 10. And that's why I love 10 a lot, because also 10, a lot of times after it goes to 10, 12, 13 or a lot of times it goes back to break even as well. So I love to capitalize on the full move, like the full percentage, 10R, 10%, instead of like closing partials and then hoping for the best, hoping it goes to like another 30R or something. Yeah. Hopefully that makes sense. Any questions? Raise your hands if you want. 100 ticks is 1 pip. Yeah, as you can see, well, on this one, 10, wait, let me just check. What is it? Entry, 1,000, what is it? 1,000 ticks profit level. Yeah, so it'd be 100. 100 is 1, yeah. 100 is 1 pip. 10 points is 1 pip. Yeah, so 100 ticks. This is 100 ticks. Is 1 pip. So 10 points, yeah, 1 pip. I use Pepperstone, yes. It doesn't matter how 1 minute order flow comes into the 5-minute chalk after the, yeah, it doesn't matter. If the 5-minute chalk happens, right, it doesn't matter if the 1 minute is like coming down bearish, right? Still, you can take a 15-second chalk from there. Okay. That's the biggest problem, cutting trade short and not letting the edge play properly. Yeah, that's a big problem, Does the DCE rule also valid for the 4-hour play? Nah, like you don't need these double confirmation. Like once it comes in, like I showed you earlier, it already has 5 confirmations already, like, and the 15-second is in your favor already, which is the main part of this plan. Is like if the 1 minute range is large and the 15-second is like bearish to come back into the POI, then wait for that 15-second to go bullish again. So this one already is part. That is the entry. That 15-second has to be bullish. Anyways, this one obviously making sure that 15-second has that extra confirmation to go back to bearish is very important. That's why this rule applies a lot more to this scenario than this is already part of the rule anyways. So you don't need another 15-second after that alignment. you just take it. And as you can see, it works out so often. It works very well. Like the trade I took up here as well, same thing. If you remember these this day, this is when I passed like the 300k MFF challenge from this trade. Same scenario, like 5 minute coming out of a 4-hour POI. Like all of this was a 4-hour POI basically on the left. 5 minute chucks bearish from here to here, pushed in, push out, takes the high, takes the low, continues to continue lower pricing like this, new range from here to here, comes into the premium, comes into a 1 minute POI, simply take a 15-second chuck. Yeah. Comes in, I think it was like a 2 minute something POI here, and then 15 seconds right there. Yeah, takes the high, takes the low, push in, 15 seconds. Stop loss was a little bit big, but it is what it is. It was a 300k account, so I was like, yeah, I want to make sure it's a safe stop loss, if you know what I'm saying. Trade like cash machine, execute flawlessly is a goal. Yeah, man, it applies to trading and applies to life as well. Like everything that you do, any goals that you have, that's how you should approach life. When you move to break even, are you doing it exactly on your entry? Yeah, exactly on entry. Because break evens, there's no commissions really on this pair, so break even is break even. Like you don't lose anything. When do you use 15 seconds? Oh yeah, I just showed you. Yeah. Why were you still taking 5-minute ranges out of the 4-hour POI? Because it was super close still in the 4-hour POI. Where is it? Oh, it's here. Because like I said earlier, that the 4-hour POI is here. And as you can see, all these trades were still like around, like just coming out of that 4-hour POI, I'll still take them here if it's following the flow. But until it comes out into like a 15-minute, like at this point, we are in a 15-minute supply zone here. Yeah. Because you see it's one bearish candle, it's engulfing 3 bullish candles, so that makes your whole supply zone right here. So as soon as it comes into that, I'm never going to look for a 5-minute entry. Yeah. Only down here to catch them. Couple of trades coming up. That's it. Take your 10R, close the trade, because what price could do now is possibly do this, come lower before going higher, right? So you have to be very logical and take your 5-minute entries, in the POI 4-hour or just coming out of it, just close by, yeah. But if the 15-minute chucks, let's say the 15-minute and the 5-minute is the same range. Let's say this to this, and it is the 5-minute and the 15-minute, yeah. And it chucks like this, right? So now the 50-minute and the 5-minute has chopped. If you put in the chat, like, what do you think I'm going to use? Am I going to use a 5-minute range rule, or am I use a 15-minute rule? Which one am I use? 5:15.
Still the 5-minute.
Let's see what everyone says. It's close. I mean, it's like 50-50. Okay, no. Yeah, no. yeah, the 5-minute one. Yeah, the 5-minute rule, right? Because it's the first trade coming out of the 4-hour POI, so I'll still use the 5-minute rule. Okay. But if it was like, let's say it's done a 15-minute chalk like this, and then it continues like this, then yeah, now 15-minute rule only. Yeah, 15-minute rules only now from here, right? But on this first one, the 5-minute first chalk comes in like 5 minutes bullish as well. 5-second, what's called the 5-minute rule with the 15-second chalks and the 1-minute POIs are still valid in here, right? This entry here, okay? So 15 as well. All right. Let's see any questions before I move on to the next one. Let's see. Hold on. He's calling family range. Okay. Charges and if price is near for our order for target, would you play the 15-minute order for counter trends? You have to unmute yourself for that one. Yeah, I'm not sure. What do you mean? What else?
Yeah, that's
Yo, how's it going?
you hear me?
Yeah.
So we have a 4-hour order flow, and we have pullback.
Yeah.
Yeah, and have the pullback at discount. More. Yeah, and we have again the impulsive move. Yeah, when we are here, we will play the 15-minute counter trend.
Oh, I'm gonna talk about this now, actually.
Okay.
Yeah, I'm already gonna talk about this. Don't worry. But to answer your question, like no, I'm not taking no sells here because if it's already coming to discount into a 4-hour demand zone, this could happen. So I'm not gonna take any sells here. Okay.
Okay.
I'd rather wait for buys.
Yeah, that was one. And I have one more about the sweep on Friday's price action.
Yeah.
New York open, I think 2 o'clock. I'm not sure. Here, I think at 1 minute, I didn't know which one has to be swept to be able to 1 minute.
15 minutes bullish, right? And then it comes down, flips, breaks.
Yeah, which one? The flip or the extreme has to be swept?
The flip has to break.
The flip.
Yeah. Whatever flips and breaks the range. Yeah.
Okay,
So,
because I was not sure which one I had to wait to be swept.
this one.
Okay.
Yeah.
Yeah.
No problem. Okay, prop firms is a 5% drawdown limit, including equity. So if I'm on a trade when 7 comes down, no lavish. That's only if you're like holding that trade the next day. Like if you're holding it one day and it comes like next day, if you're in drawdown, then you get taken out. Like yeah. So that only applies if you're holding trades over days. Like so, simple thing to do is just close your trade in the day. Like 10 hours does not take 2 days for us. Like it takes about 10 minutes to half an hour to an hour maybe. Like cash is king. Okay, because I got told this. Okay. Okay. Exactly. We don't trade overnight. Any questions on you? Okay, Emmy. E26 Emmy.
Yo, guys, can you hear me?
Yes, how is it going?
My question is about the scenario where we have a 5-minute and a 15-minute choke inside the 4-hour POI.
Yeah.
We know that you are playing the 5-minute scenario in this case, but are you doing this only when the 5-minute and the 15-minute choke are the same, identical?
Yeah,
because
only that.
Yeah, if we get the 5-minute and then the 15-minute, I assume that you are not gonna use the 15-minute leg with 1-minute POI, right?
No, of course not. So as you remember here, this gave 5-minute chocks already, yeah? So after it's already given 5-minute chocks and then it's given 15-minute later, yeah? Then I play the 15-minute moves.
Yeah, I mean, you are not combining the two.
No, separate. Only when it's already only when it's already combined. Only if the 5 and 15 is all the same.
Identical.
Yeah, it's identical. Then I use 1-minute POI, 15 second in here. That's it. Right?
Yeah, makes sense. And when we are taking 80% of, are we doing this at the week high or the demand, the supply in this case? Because we are not taking, let's say we are in a long, right? And we are taking 80% of the high or the supply zone because we are not taking buys in a supply, you know?
Exactly. So there's no supply, you know, there's only supply is like the proper valid supply on the left. But this is bullish order.
Right, like, because that's a weak high and that is not a valid extreme.
Exactly. So then you just target the high.
The high, right. Thanks, man.
No problem. That's only when you pro trend 4 hour. But when you counter 4 hour, then you don't know like how far it may pull back before going again. You see? So just go 10 hours. That's it. Okay.
Okay. Thanks.
No problem.
Yeah, man. So always about Friday price action on the 15-minute. So when, yeah, if you go on the 15-minute, so you can see that pretty much brought go before the big push up, yeah, just before it shoot up. Yeah, so on the 15-minute, I saw that it broke bullish and then it broke bearish again. So I didn't think about taking longs at all.
That's good.
So I just wanted to make sure if that was just manipulation of the price or
100%.
Yeah,
100%.
okay.
Like as you can tell,
No, because I thought I had the doubt. I had the doubt if I had to consider the new 4-hour POI that formed before, just before that. I don't know if it has formed another 4-hour there. In that case, yeah, maybe I should have taken longs, but not down, more down. I think it was. Oh, was it there?
This was where the 15-minute happened.
Oh, okay, fair enough. Yeah, all good.
Yeah,
all good.
nothing. Yeah, nothing. Just stuff to.
Yeah, so just manipulation, eh? Yeah.
Oh yeah, it's just one of them. Like just before the news and the New York Stock Exchange opened, it just took out all these lows before shooting to the moon.
Yeah, fair enough.
That's just life. If it's not textbook, we leave it out. We stay out of this shit. When it's textbook, that's how we execute.
All good.
Yeah, no worries.
Beautiful. Thank you.
Okay, so let's talk about the fact that if you go onto the facts page, and I mentioned this before many times, the fact that when you have a first 15-minute chalk, right, of a 4-hour move, such as 4-hour impulse or correction phase, yeah, that first 15-minute supply demand range can be used still as a POI for entry. All right, let me just leave that here. Shit, can't leave that here. Let me leave it here. All right, so this, right, does everyone understand? The first 15-minute chalk, so let's talk about, let's say, for example, 4-hour, right? Okay. 4-hour is bullish, obviously, from here to here, this to this, right? So inside of this low and this high, this low, right, we're obviously going to get a 15-minute chalk, right? For it to come like lower down or higher up, lower down, like obviously inside of this, the 15-minute will obviously go bearish to bullish, right, to make that higher pricing. Inside of this, obviously we're going to see price going up and then shifting on the 15-minute to come back down, right? So it's like this the cycle, yeah? Like 15-minute goes bearish just to make that 4-hour pullback, then 15-minute goes bullish to make that 4-hour impulse phase, right? But what I'm trying to say is that the first 15-minute chop that happens, right, we can still use that demand or use that supply, right, even if 4-hour, even if the 15-minute continues lower like this and then breaks bullish, meaning that the 15-minute is no longer aligned in your favor to look for this sell, yeah? Whereas in any other time, any other scenario, you should always make sure the 15-minute or the 5-minute is aligned, right, in your direction for longs or sells before taking a trade. Whereas in this scenario, because this is the first 15-minute chalk, the first initiation of sell orders to cause a 4-hour pullback, right, we can still use this 15-minute demand or supply zone, the extreme points especially, to look for a 1-minute chalk scenario, yeah? This scenario here, right? Exactly the same, right? As in 15-minute inducement, 1-minute chalks, 15-second chalks in the 1-minute POIs, right? If there's no 15-minute inducement, we need 1-minute inducement, sweep it, 1-minute chalk, and then 15-second alignment, yeah? Same thing, right? Here, right? The only difference is the 15-minute is coming up bullish towards it, yeah? So yes, it's a little bit more risky, right? Because a 15-minute could do this, continue, but I've seen this play out a lot of times, enough times to definitely take this entry, yeah? Same here, 15-minute chalks bullish here, first time, right? To call that 4-hour impulse phase, yeah? But to come back down, right, it has to chalk 15-minute bearish to come back down into this, yeah? So now we have to ask ourselves, is this 15-minute inducement? If there's no inducement, then we need to see 1-minute inducement, sweep chalk, 1-minute chalk, then 15 seconds in the entry to take it, okay? So let me just show you an example. So price is, which one is it? Let me just double check. This scenario here, yeah? So let's just rewind it to the, all right, as you can see, look what happened. We have this impulse phase, we have this correction phase back into this 4-hour demand zone, yeah? And then inside of here, we are looking at the 15-minute as the first chuck. Where does it happen? It happens right here. This is what flipped and broke this previous 15-minute range. So if this gets broken, that becomes then your 15-minute chuck, right? It gives a 15-minute chuck, falls back, we can look for an entry. Even on the 5-minute, we can look for the entry because, like I said, the 4-hour zone, the 15-minute and 5-minute, if they're the same, right, which it was in this scenario, we can look for the buy.